excuse me. Welcome everyone to our weekly Forex market analysis in preparation for trading on week of September 11 to 15th, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, especially with everything that's going on right now around the world. So be careful with your money. I highly recommend keeping your trade size small or demo trading just as, till the volatility passes. If you have questions about your individual investment needs or any advice around your individual investments, I recommend you talk to your investment advisor. So we'll start off as usual by taking a look at our Forex factory to see what's going on in terms of what's coming up in the news. But before we do that, a few important things to cover from geopolitical events. So North Korea is still a threat. Last week we heard President Trump say that a military action isn't the first thing that they have in mind. So as long as North Korea is a threat, that will drive flows into safe haven currencies. So gold is one of the things that goes up anytime there is risk in the market. Also, we have 2 hurricanes. Now that will have an impact as well. So one of the ways that they impact the U.S. in particular is because one, all the cost involved with the hurricanes and that. So that's a problem. And another thing is also, and I'm just talking purely from the market's perspective, not talking from anything else, just how it impacts the markets. So second thing is the hikes that the Fed has been doing over the last few months. It pushes that back because U.S. will have to spend a lot of money on the relief efforts as a result of that. If the Fed continues to raise rates, it's just not good for the economy as a whole. It will have a negative impact on the economy because now you're focusing on rebuilding as opposed to producing production that would come out of those areas. So it will have a negative impact on GDP and the economy. So overall, that's part of the reason we are seeing the U.S. dollar has gone down because of this, because of the big cost involved in this. Also, then the Fed won't raise rates. So all of those things are overall negative for the U.S. dollar. So just keep that in mind. Anytime we have such natural calamities, there is a cost involved to it. And usually it is negative in terms of the whole economy and the currency overall. Another thing, North Korea, the problem is the war. They could, as long as they keep testing their missiles, and depending on if the situation escalates, so that will again the flows will go into safe haven assets. So Japanese yen, Swiss franc, gold, those are some of the things that will benefit as a result of this geopolitical risk in the market. So that is another thing to keep in mind. Last week was big week in terms of the central banks. So what we have seen is Bank of Canada raised rates, our RBA stayed the same. We had ECB, even though they tried to be dovish, they were still hawkish. So basically what they said, market was expecting the asset or QE to actually be cut down in September, but then they said we'll come back in October with a plan. So that is still positive. Essentially what they're saying is they will cut back on their asset purchase program, which is positive for the euro. So that's another thing that came out of the central banks. So those are some just like overall what's going on in the markets. So let's see what we have on the tab for news this week. Monday, not much in terms of our news, just all orange and yellow news. Business confidence number for Australia will be important, but other than that, not much. CPI number is always important. The CPI which is the inflation, has been going up for British pound, which is a positive thing. So when inflation goes up, as long as it's controlled, so central banks want the inflation to be between 2 to 3%, and British pound or UK has shown that type of inflation. So once we see that, generally the pressure is then on the central banks to increase interest rates. So that's why inflation has a positive impact on the currency. So if the number comes out better than what's forecasted, we are likely to see British pound jump up. And then we have, going into Wednesday, average earnings index is also very important, just like the employment numbers. So all these employment numbers will be important for British pound. But when you're looking at employment numbers, one of the things that the market will pay attention to is will be average earnings, and that's just like inflation. So year over year we want to see inflation go up, so the price of goods should go up slightly. We don't want it to be huge, but it should go up slightly. And same things with the hourly pay for everyone, it should go up overall. But so if the employment is going up, but the hourly pay is not going up, that may not have such a positive impact on the currency. So just keep that in mind. And then we have PPI numbers, which is a leading indicator. So that will be important for the US. Of course, crude oil inventories will be important. And crude oil gets impacted when there are hurricanes because the refineries get shut. So, and if crude oil gets impacted, then Canadian dollar will get impacted as well. And we have numbers out of Australia, employment numbers. Again, they will be important. Industrial production from China. So Chinese numbers will have an impact on Australia and New Zealand because they're big exporters or to China. They supply all the mining products and things like that. So keep that in mind, Chinese numbers, because China is so heavily weighed towards industrial production. So these numbers will have, could have a significant impact on Australia and New Zealand. Okay, so now we have two more central banks coming up this week. We have the Swiss, excuse me, Swiss National Bank monetary policy assessment, and they're not expected to raise rates at this point. So depending on what they have to say in terms of their projections, that will have an impact on Swiss franc here. And we have Bank of England. So Bank of England is in an interesting place. So far we have seen in terms of the votes here, last time these votes went had gone up in June and July. They were kind of at 2. So what's going on here is they have gone up. So basically what this means is that more MPC members are saying that we need to see an interest rate hike. So the market doesn't think that they have enough members to actually do an interest rate hike or for the bank to consider an interest rate hike. But when these numbers start going up, like we start seeing, so we were 009, so nobody wanted an interest rate hike, then one person did, now 2%, and then previously 3 people did. So if these numbers go up, that will have a positive impact on the British pound, because that means that more, it's likely that the Bank of England will start talking about interest rate hike. So again, the direction will be just as important, even if they don't do an interest rate hike. What they say will have a big impact on the market, just like ECB. They said we are going to look at it in October, and that was positive. So if they say we're going to consider an interest rate hike, or if they say that very soon we will have to start looking at interest rate hike, all of those things, any kind of commentary that's positive like that will be positive for the British pound. And even going towards the end of last week, British pound actually went up because we are going into this here. And then inflation numbers out of the US, again, very important. And then we have core retail and retail sales numbers for the US. So these will be important as well. So the most important part will definitely be this on Thursday with the central banks. Okay, so let's move on to our charts now. We will start off with euro dollar here. Euro dollar, a big positive week for euro, and big part of that was the central bank essentially saying that they are going to start looking at cutting back on the asset purchase program. So going forward here, we are positive, big positive weekly candle here. So we're looking for a further move to the upside. The target would be a 122.30-ish level, which takes us, or even the 20 level actually, which takes us back into the top of this. So we haven't been at this place since 2014, but we are back there now. So 122.20 will be the next target to the upside. So we are bullish on euro dollar. Pound dollar, a huge week for British pound here. For the last couple of weeks, we had seen these small candles and looked like it may even turn down. But this is very, very bullish right now. So we are back into the top here, 130 to 30. As a result, we are looking for a further move to the upside here. 134.75 level will be the target to the upside. Now, the caveat here is that the Bank of England is scheduled for this week, so that could have a big impact on them, on the British pound. So keep that in mind. But overall, we are bullish on British pound and looking at 134.75, 80 level, so back into the highs here. And this will be a critical level. So if we are able to breach this level, it opens up this huge inefficiency that was our Brexit. So those are the two targets to the upside, 134.75 and 136.40-ish level, which is the bottom of this candle here. And then that just opens up this. So then we are back into these previous levels again. But for now, these are important levels because we haven't been here in quite some time. Last time we tested these levels, price dropped quite considerably here. And if the central banks comes and says we cannot do or we are not looking at interest rate hikes at this point, that will be negative on the British pound. So keep that in mind. And as a result, we could see British pound come back all the way to the bottom. So that is a scenario we'll have to keep in mind because of Bank of England. But overall, just from purely technical perspective, this is quite bullish. Aussie dollar here, we are pushing the highs, looking at this little ascending triangle. We broke through that. Now we are back into these highs. RBA hasn't really done any interest rate hikes, and they're concerned about their currency strength, but that is not having an impact. One of the big things is because US dollar is taking quite a hit with we heard a couple weeks ago one of the officials came and said that weaker US dollar is or they would like to see a weaker US dollar, which will of course have a negative impact on the US dollar. But with all the hurricanes and things like that, that is negative as well for the US because the GDP will decrease as a result of that. So this looks bullish. We are looking for a further move to the upside, 82.97. So 8,300, 0.8300 will be our target to the next, will be the next target. And this is the level we are looking at. So again, we haven't been here at these levels since 2015. So quite a big resistance here. So once we are trading this, we have to be mindful that we are coming into some solid resistance levels. So we just have to be prepared to take our profits and not just look for too big a move just because they are at very, very strong levels. New Zealand dollar has been more weak or weaker than others. So this one here, we are just in a range. So it is retreating, positive bullish candle. We haven't seen a bullish weekly candle in quite some time here. So this is a bullish engulfing candle here. So as a result, we are looking for a further move to the upside. Now, it is still in a bit of a range here. So 1, 2, 3, 4. This is the fourth week that price has stayed in this area here, general area. So it can be considered a range-bound market at the point. So I would watch this 0.7340 level. So if the price does not break this level, then we could see the price drop. So we could see price do one of these. So I would keep an eye on 73.40 level. And once price comes to the bottom, we could see a bounce up. So that will be the first scenario. But overall, this is bullish. So once this level is breached, 73.40, we're looking for 74.50 level, or even slightly higher into the top of that pin. So 74.80 to 74, sorry, 74.40 to 74.80 level will be the next target to the upside here. Dollar CAD here, big huge week for dollar CAD because Bank of Canada raised interest rates. We saw a big drop in this, and now we are Again, fundamentally, this is Canadian dollar is strong just because of the various interest rate hikes and stuff. So this is bearish here for dollar CAD, and we're looking for a further move to the upside. So since we have had such a big drop here, we could get a bit of a pullback into this 2200 level and then a drop or even slightly higher. So I would keep that in mind with all of these crosses because US dollar has taken such a hit. So any US dollar cross, any of the US dollar crosses could have, I would expect bigger pullbacks in them. And we are definitely looking for a further move to the downside into 1.1920 level here. So now again, keep in mind all these prices, we haven't been here since 2015. So I would expect orders here. So I would expect a reaction from these levels here. So just keep that in mind. But the target is, we're bearish on this. My target is 1.1920 to the downside here. Euro Swiss has been trading in this range for some time. We haven't changed any of these lines around. So this is the range. I would still look for a range-bound move. So once price gets into the top here, 1.1520-ish level or into 1500 level, we're looking for price to drop. So this on a weekly here, that's a bearish pin bar on a weekly. As a result, I will look for price to just move towards the bottom of the range here. Once price comes into 1.1250 level, we could get a bounce to the upside if it doesn't break this level. So as long as we have these geopolitical events going on and the flows go into the safe haven currencies, Swiss franc is a safe haven currency, so we could see Swiss franc go up, which means Euro Swiss or any of the Swiss crosses are likely to go down. So keep that in mind. And with this one, we are looking for a further move to the downsides toward 1.1250 level. Pound Swiss, pound has been quite strong. So pound Swiss is actually a bit of a neutral weekly close here. We have seen British pound go up as a result. Pound Swiss here hasn't really done much. It went up, went down, and closed right in the middle. So this one is neutral. We'll just have to see how things line up. So price has reacted from here previously. So this will be a good level to watch here, 1.2520 level here. If the price fails to go above this level, then we're likely to see a reaction. So we could see, again, a range-bound type of thing. So with these with the risk aversion going on in the market, and also then market goes between risk aversion and then back into the risk again. So these things are a little bit more difficult to predict because they are driven by comments and actions of people that are really volatile. And as a result of that, it creates market volatile conditions in the market. So I would really pay attention to like your Bloomberg and Reuters and your news feeds. This is where the news feeds are really, really important. Just keeping an eye to see what comment has come out into the market, because it will move the markets based on the comments that come out. So this one, the first target, so I'm going to treat this as a range bound here as well, till it breaks above this level. Otherwise, I'm looking for price to come back towards the bottom of the range, and the target here would be 122.80 level over here. Dollar Swiss here. Dollar Swiss is very bearish, especially with dollar getting hit, and of course the safe haven flows into Swiss franc do not help. So very bearish candle here. We're looking for further move to the downside. 92.60 would be our target, which is this pin right at the bottom here. All right, yen crosses. Pound again has been strong, but it is in a range at the moment. It is, and part of the reason is because the comments. So if President Trump says that military action is not their first choice, that will Japanese yen will drop as a result, which means all the yen crosses will go up. When there's another missile launched that creates risk in the market, Japanese yen will go up as a result, and then we'll see all the yen crosses drop. So right now, there is no clear direction. It all depends on what happens in the market, based on this whole North Korea situation, and that will dictate the flow of money into various currencies and safe haven assets or risky assets. So that's what we're looking at for the last quite a few weeks. It has not moved anywhere else, or sorry, quite a few days it hasn't moved anywhere else. So we are again in that sideways kind of move with the British pound. British pound has been strong, but Japanese yen has been strong as well. So as a result of this one, this is going to be our range with this one. For it to move to the next level, it has to break 143.20-ish level here. And then we are looking for a further move into 146.50, but this will be an important level. So right now, I'm going to treat it more as a range as opposed to bullish, because it's just a very small candle, not much of a move, and hasn't really gone anywhere. So it could just as easily come back towards the bottom of this range. So that's what we'll go with. So if it goes into 143.20-ish level or 13 level here, we're looking for price to move back towards the bottom. Once it hits the bottom at 139.20, I'm looking for it to bounce to the upside. Now, the thing that will change this one again will be Bank of England, depending on what they say. If they are hawkish in their comments, so they are positive, even if they don't say anything about interest rate hike, but they say the economy is doing really well, inflation is going up, we are positive overall, so their whole tone is very positive, that will push British pound up across the board, and then we are looking for 146.50 to the upside. So that's how I would play this one. Euro yen. We have a bearish close here. Like I said, yen is strong. So we're looking for further move to the downside here. The target would be 127.50 to the downside. So into the bottom of this pin here. That's a nice candle close for the weekly. So just looking for further move to the downside. Aussie yen is also bearish, but not quite as bearish. So this one, we're just looking for it to come back towards the bottom of the range. 85.50 will be the target to the downside. So the dollar yen has been very weak. Big bearish close here. So looking for price to move lower into 106.50-ish level. And if the things continue the way they are, we could even have a bigger move into 105.50 level here, right into this support and resistance area. So 105.50 will be the next target for that. Euro pound, bearish close on the weekly here. We are looking for a further move to the downside. So the target here will be, the first target is very close, which is 90.50. So let's move on to the next one. So you could likely go all the way here. 89.50 will be our target to the downside for Euro pound. Now, the thing that will change this again will be Bank of England announcement. If they are positive, this is likely to drop quite nicely. But if they are bearish in their dovish in their outlook, then this could shoot up. So we may just see price drop into here and then price take off to the upside. In that case, our target would be 90 to 80 level here. We could go all the way back in just one push because of Bank of England. So that keep that in mind. So that is it for me. Any questions? Gold. Okay, let me take a look at John, yeah, I do use volume. That's just on my other computer. For some reason, my charts have been messed up on this computer here, and I'm not. There's certain things that are not working. My volume, I just can't get it to work on this one, so it's installed on the other computer, and then another one, COT. My COT won't work because my flash won't work, so I need to do something about it. But yes, I do. So let's take a look at gold, see if I can find my gold here. Here's the gold. Gold is very, very bullish as long as there's geopolitical risk. We are looking positive on gold. So let's see. I need to go into a monthly here. So we are into these highs. So with everything, we are into these highs because markets have been crazy like that. Okay, so with this one, we're bullish for sure. And the first target will be closer one here, which is 1384 or even, so 1394 will be the first target to the upside. And beyond that, we are into 1429. So 1394 and then 1429. So bullish on the gold. There hasn't been much pullbacks because look at this runaway price here, gapped up, pulled back, right, to test the high and then stayed up. So very, 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 very bullish here. And it's all because the risk in the market with the hurricanes, with North Korea situation, you know, once we have this type of thing, people tend to go into gold. All right, anything else? So 1394 will be the target here to the upside. Okay, so no more questions. So we will call it a wrap. Oh, sorry, there's one other questions. I'm going to talk about basically, so Francois, you asking about what impact does all the geopolitical risk the monetary policy has on the US dollar? So with the US dollar, just to sort of go back a little bit, when the Fed, so anytime a central bank raises rates, that's good for the currency. So that's why we had seen when Fed announced the interest rate hikes. So that was positive for the US dollar. But US dollar situation has been quite interesting. So when we take a look at Bank of Canada, it's very clean. Bank of Canada raises rates, Canadian dollar goes up, US dollar CAD goes down as a result because Canadian dollar is going up. So very, very clean, no problems there. It's that this is how the fundamentals work. Interest rate goes up, currency goes up, hand in hand with that. That's just how it is. That's what ECB is doing right now. They're not talking about raising interest rates, but they're talking about cutting back on the monetary policy, which is again positive for the currency. With the US dollar, it has been different because we have had political situation especially with President Trump getting elected and the comments that he has made and all the different issues within the US. So that has not helped the US currency. So as a result, the monetary policy is not having as big an impact on the US dollar as it would normally have on anything else. So central bank, whatever the central bank is doing or the Fed is doing for the US is not really helping that much, and US dollar is dropping. So where do we stand right now? So we were talking about monetary policy with the Fed, with the hurricanes and things like that. The Fed is not likely to raise rates going forward. Now, first they were supposed to raise rates, or market was expecting them to raise rates in September. Now they're expecting to raise, or then the market was pushed that back into December. But now with the hurricanes and everything else, the chances are they're not going to raise rates in December. So if Fed does not raise rates in December, that will be negative. And leading up to it, so the more problems there are in the market, there's less likelihood that Fed is going to raise rates. Even with North Korea situation, that puts a damper on the Fed expectations because US is at the forefront of this. With Canadian dollar, Bank of England, ECB, it does not have that big an impact because Korea is not trying to launch a missile there. Even though they will be, if there's a war, they will all these nations will kind of back up US, and they will be engaged in the war, just not to the same extent that US will be. So that's why US has more risk from North Korea than these other places do, other countries do. As a result of that, monetary policy is not likely to get tightened in the US over the coming next few months, and that's why that's one of the reasons the US dollar is taking a hit. So we're not expecting this to, unless Fed. It's just hard to see how Fed could raise rates right now. There's just too much going on that's just negative for the US in general. So yeah, so right now everything is US dollar is just bearish. So everything against the US dollar is any cross with the US dollar will be bullish. Francois, does that answer the question, or were you talking about, did you want me to talk about anything in particular? Yeah, so I'm expecting US dollar to be negative for a little bit here. Unless things change, North Korea situation goes away and that threat goes away. And, we have the debt ceiling thing that needs to be raised as well. So there are a few things going on. Or so if President Trump says, well, we want, strength in US dollar, that will make the US dollar go up. But right now, I don't see that happening in the immediate future. Of course, things are dynamic, things keep changing, so that could change. But for the near future, I think we are kind of in for a little bit of a US dollar weakness for now. All right, so we'll call it a wrap. You guys have a wonderful week ahead. I am going to head out for my travels here right after we are done. So you guys have a wonderful week. And if anybody wants to join me in the trade room, you can just go to tradingwithvenus.com and just look under work with me section. So I'd love to have you there. But for now, have a wonderful week, and I will see you guys next time.